SMCI is most certainly the biggest gainer in today's session, that is today, the 25th of June 2025, and also most certainly one of the biggest movers. Over 73 million shares have crossed the tape. Intraday high in this session for $6.93, attempting to retest its May highs. So the folks at Zax are asking if the direct liquid cooling building block solution will deliver growth for the company. So the one on the right, SMCI's direct liquid cooled building block solution integrates rack scale plug and play architecture with direct liquid cooling to optimize thermal performance, reduce power consumption, and increase rack density for AI and high performance computing workloads. That's the direct cooling building block solution. DCBBS is developed to cater to the rising demands in the data center efficiency by supporting higher wattage CPUs and GPUs while reducing reliance on traditional air-cooled infrastructure. The DCBBS is optimally designed to support AI and ML workloads. Its introduction is likely to support the revenue growth of SMCI servers and storage system segment, which already grew 19% year over year in the third quarter of fiscal 2025. The robust growth was primarily driven by Supermicro's direct liquid cooling products for data center applications, which touched a production volume of more than 2,000 DLC racks per month. For future prospects, SMCI is positioned to play a leading role in the transition toward more sustainable high performance data centers. The company expects the DCBBS to significantly contribute to revenue growth by tapping into the expanding AI and HPC infrastructure upgrade cycles. And their consensus estimates for 2025 and 2026 revenues is or pegged, or their revenue is estimate is pegged at $22.12 billion and $30.2 billion, indicating year-over-year growth of 48% and 36.33% respectively. So how do competitors fare against SMCI? So the company's DCBBS faces competition from HPE and Dell, which provide direct liquid cooling solutions. HPE offers liquid cooled HPC and AI servers through its HPE Cray and Apollo systems. Dell offers liquid cooling architectures through its Apex and PowerEdge platforms. Dell has designed its AI server solutions to be custom and modular by adding both air and liquid cooling features with 24-hour rack deployment to turnaround and end-to-end deployment services. These key differentiators make its servers easy to deploy, hence encouraging smoother adoption. However, SMCI holds a better opportunity with its DC BBS due to its fully integrated rack scale plug and play design. Okay, so a lot more down there. Okay, you see the link to this in the description box below. They on the let's see now. Let's have a look at the. This is a 4-hour chart. Extrapolation is for higher prices to remain in place up till Tuesday, the 1st of July. Do we have projections here? We have downward projections, nothing upwards. 44.16, 45.45, 46.26. On the line trend is, I think it's on this 4-hour chart is bullish. Let's have a look at the 1 day chart, daily chart. On the daily chart, the underlying trend is okay. It's neutral now, if not bullish. Yeah, higher prices expect to keep printing up till Tuesday, the 29th of July. Okay, and I think we have some projections here. Yeah, we do. 58.07, 65.33, 69.82. These were printed. These projections were printed on. They were first printed on Monday, the 9th of July. Okay, yeah. So underlying trend is bullish now, not obviously bullish, but bullish now, not strongly bullish either as well. Let's have a look at the price pressure momentums. Okay, you can see everything is in a trend mode. Everything is in a trend mode. The 21-day moving average is in a trend mode. It's 10-day moving average equally in trend mode as well, and there are no negative derivatives. So the probability of it remaining above its 10 short-term moving averages is there as well. It's there. We've seen of late that its 40-day moving average served as a primary demand line when this was when the news broke that it issued some $2 billion worth of convertible notes. Definitely, easily, that was a buying opportunity, and people bought it. And the company indeed promised that, or rather, put measures in place to ensure that there's a minimal dilution. By capping the calls, not calls, meaning that it will mean that they will have to buy some of the shares, and obviously, when they buy the shares, then they're no longer available in the market. As such, they are removing. They would remove the dilutive effect of converting those notes in the future. So that's what we're looking at right now, attempting to retest its May highs. Let's see now. It has actually broken through the May high of 45.82. The next target will be the February high of 60.75. Yeah, and before then, there's a couple of resistances there. We have 50.80, and if it breaks through 50.80, that's actually the only barrier there. 50.80 in the very short term. 50.80. Yeah, we have. Yeah, then we might look at if it does that, then we'll be looking at $56, 56 up to $57, and then if it does to break through, then we're looking at towards 62. And if it breaks through 62, then 68 is possible, and so 70.7. But there's a lot of interest in the stock, a lot of interest. It's I mean, everything is in place for it to do all of these things, but it's so hard. It's so hard to picture the stock doing this, because I mean, it's so well. I mean, there's short sellers involved as well. The funds that have bought the convertible notes. They will be selling what they do is right away they sell the stock short. Yeah, they sell it short because they need to balance their position. If yeah, they sell the stock short. So as to balance things, make sure they are making money either in either direction. If things go bad, if the stock rises so much, then they will use their call contracts to come out of their short position. And if the stock of if the price of their bonds of their convertible notes keeps doing well, then that's good as well for them. So this is what's going to be happening. But the fundamentals are in place. It has the prospect of doing well regardless of the negativity. So this is its weekly chart. Underlying trend is strongly bullish. Projections go all the way towards 93.50. Below that, we have 83.89. Below that, it's a 68.33. Yeah. So let's see. Okay, let's see whether there's any fresh news. Nothing really fresh. Supermicro is the top performing stock in the S&P 500 today. Volatility is nothing new. Okay. Supermicro was the top performer in today's session as a volatile semiconductor company clawed back all of its losses from a steep drop earlier in the week. Okay, yeah. Intense daily swings are nothing new for the semiconductor stock. Over the last 52 weeks, SMCI stock has a beta, a common measure of its volatility of 2.1, meaning that is It is roughly two times more volatile than the broader market. At times over the last 2 years, the company has been the beneficiary of investor frenzy around AI, which brings it down, which brings its own the degree of unpredictability. Fellow AI hardware stocks like Nvidia and AMD have better above two. But shares have also fluctuated over concerns about the company's accounting practice. Okay, we know that already. So despite the week-to-week whiplash, SMCI is now in almost the same place as it was 9 months ago, with shares up less than 1% since closing at 45.82 on the 25th of September. Yeah, so see what you make of SMCI, and thank you very much for watching this video.